Friends who have moved to or are in the process of moving to Israel, you'll want to be sure you know the tax laws for both your host country and your home country. Fortunately, we've outlined the 8 things you need to know as an expat living in Israel. Those who are considered tax residents of Israel will be taxed on worldwide income. The income tax rates range from 10% to 45%. To be considered an Israeli resident, Israel must be viewed as the center of vital interest. This means that workplace, permanent home or residence, business connections, location of assets, and location of personal and social connections must reside in Israel. A residency test based on days spent in Israel may also determine residency. Those who spend more than 183 days in Israel are automatically considered residents. In addition, those who spend 30 days or more in Israel and have a total of 425 days between the current tax year and the 2 previous years are considered residents as well. The tax year in Israel runs from January 1st to December 31st. All taxes are due to the Israel Tax Authority by the 30th of April. Extensions are available, but they must be applied for. In Israel, all foreign workers are required to pay into its national insurance. However, employers may pay part or all of the national insurance contributions. Israel has a few other taxes that U.S. expats should be aware of. These include a 16% value-added tax, which applied to consumer goods. Certain items, such as exported goods, are tax-exempt, however. There is a capital gains tax between 15 and 25% and a real estate tax up to 20%. If you are a U.S. citizen or resident, you will still be required to file U.S. taxes each year. If you have assets in foreign bank accounts, you may be required to report those as well. Specifically, anyone with $10,000 or more in a foreign bank or financial institution during a calendar year will be required to file the F-bar. Fortunately, there are a few ways you can lower or eliminate your U.S. tax obligations. The first is the Foreign Earned Income Exclusion, which allows you to exclude a certain amount from your foreign earned income on your U.S. expat taxes. The second is the Foreign Tax Credit, which allows you to offset the taxes you paid in your host country with your U.S. expat taxes dollar for dollar. And the third is the Foreign Housing Exclusion, which allows an additional exclusion from income on U.S. expat taxes for certain amounts paid for household expenses that occur as a consequence of living abroad.